Hey, good morning from South Florida, everybody. Wanted to put this video together on Meta. It's currently October 25th. Filming this before the market opens. It's currently 8:49 Eastern time. And Meta reports earnings after the bell tomorrow on October 26th. And with earnings in question, there's always that, question about what's the stock going to do after earnings. Is it going to go up? Is it going to go down? What I want to do in this video is kind of look past this next quarter and really put their valuation in context in the coming years. So really with that in mind, this video is really geared towards a longer term investor. And it's also geared for somebody who's looking for more of a financial education or entertainment, right? So this is certainly not advice by any stretch of the imagination. But one of the things that I wanted to just do is offer a quick recap on some different scenarios, specifically based on forecasting out free cash flow. And free cash flow, if you're not already familiar, is basically a concept that says what cash is available to investors. And if you could truly forecast out for the next 100 years, the cash flow, the free cash flow specifically, that any stock would be able to generate by each year, you could simply discount that back to today's dollars and come up with a very solid valuation of what that stock is. Even if you had those numbers, it doesn't mean that the stock is always going to be at that level, but it gives you that confidence to know that that is the intrinsic value regardless of where it trades. And if you're able to buy it below that intrinsic value over time, you should do well. So again, thinking about some of the different scenarios here with their free cash flow, one of the things to keep in mind, let's think about most recently in the trailing 12 months, free cash flow on a per share basis for Meta was $13.02. When we look at that, based on the prior year, so really kind of on a sequential basis, their free cash flow went down by about 6%. So it went from $13.90 down to $13.02. But also to put that into perspective, right? Really kind of when you look at 2018 and before, their free cash flow was never more than $8. So it certainly had grown a lot. So again, not especially alarming that the free cash flow did come down a little bit. In fact, if we look at the period from 2016 to the most recent trailing 12 months, even with that 6% decline that we just were talking about, over that time period, they grew their free cash flow by an annual compounded interest of 25%. So they were growing at a clip of 25% a year with their free cash flow. I'm certainly not saying that they're going to have that kind of growth in the future, but one of the first scenarios I wanted to look at would be to say, what if we do project out some pain in the next year or two? Specifically saying, let's say by 2023, they continue to see their free cash flow decline. Let's say we get another 5% dip. Let's say after that, in going into 2024, they basically just bottom out. They don't grow their free cash flow, they hold it steady, and then from there they're able to kind of return to growth, and they grow really, for the rest of their corporate life at a rate of about 5% a year. In that scenario, they would be worth in today's dollars about $235. Okay, and what's interesting about that, right, is that kind of does model in the fact that we potentially could have a slowdown in the next year. We could have continued free cash flow deterioration, followed by a year of actually no growth, and then returning to very modest. Again, when you think about that 5% growth in the context of 25%, that would still mean that Meta as a company is still on a very different trajectory compared to where they had been in their recent history. Let's go ahead and take a look at another scenario here. Let's say that they actually have their free cash flow dip by 5%, as we had talked about. They also go to their 0% the year after, but then at that point, they never are able to recover. They never grow their free cash flow. Let's say in this scenario, you think that they're basically sinking anything additional into the metaverse. It's the absolute worst case scenario. They're 100% committed to it. They're doing that at the expense of free cash flow, essentially doing that at the expense of valuation for the stock. That would leave them with that 0% growth at a current valuation of approximately $123. Now, their low basically a couple weeks ago was down to 122. So when you think about that, they're basically saying, at the 122, they were priced like they're going to not really grow their free cash flow at all after having that tremendous success that they already have had, right? Now, scenario number 3, this scenario is actually going to look at what if they drop by 5%, and then go to 0%. So again, all these scenarios so far are kind of baking into lower expectations the next couple of years, potentially with kind of any kind of recession fears, things like that, right? So if we go to the minus 5%, go to the 0% through 2024, then let's say that they actually go to 10% growth, really, for the rest of their corporate life. And again, that's a fairly aggressive assumption, but if they were able to pull that off, they would be worth about $337. And then the final kind of scenario I wanted to look at would be, what if they drop by 5% in the next year, and then really at that point, let's say that they don't bottom, they don't go to zero. Let's say that for every single year thereafter, they decrease their free cash flow by 1%. So let's say that they're basically at this point just a melting iceberg that's just going to get smaller and smaller and smaller, but they're going to do that over time, right? In that scenario where they're, go down by 5% the next year, recession hits, they go down by 1% every year for the rest of their corporate life until they just go out of business, they would still be worth, with the amount of cash that they're able to throw off, $112 a share. And why do I think that's interesting, right? Because, and again, goes back to, this is not financial advice, that $112 number becomes really interesting, because even if you say to yourself, I think Meta is going to decline as a company, I think that they are no longer in growth mode, they're going to start pulling back. If you believe that, in today's market, you actually can currently sell options that would say you would buy Meta a year from now at $90 or $80, and you're actually still getting a fairly decent return in that scenario. And again, but you're also modeling out a number to say that even if they truly are declining, you could still map out a scenario where they're worth about $112. So I think that starts to become very interesting. Personally, just overall, I think the risk-reward profile is very attractive at these levels. So that obviously doesn't mean that the quarter is going to be great tomorrow. And I think that was one of the things I wanted to kind of put in perspective, that who knows how low the stock could go, how high the stock could go. If the stock does get absolutely destroyed tomorrow, and you do have that long-term investor hat on, hopefully that some of these scenarios can help give you that little bit of comfort to understand what the floor in this stock could potentially be. But again, we will see how it shapes up. But good luck with your investments, and hopefully this video helped give you a little bit of perspective. So thanks for watching.